Good morning, everybody. It's great to see such a big crowd on a Friday morning. I'm Wanda Riley, Managing Principal for Cushman Wakefield in Florida, and I'm joined today with three great panelists. We have Peri Demestihas, with Senior Director of Real Estate with Industrious, Jim Heistand, CEO and founding partner of Parkway, and Rae Ann Boyle, a principal with ASD and Sky. Perfect. Okay, so we're going to talk about the office market here in the Sunbelt region. The Sunbelt markets are leading the nation into the next economic expansion. In most Sunbelt markets, we expect population growth to double the national average. Job growth has bounced back. In some cases, office using employment has surpassed pre-pandemic levels. But the dynamics of office have changed. While most of us can agree the office space plays an important and critical role in a company's success, it has not been a smooth transition back to the office. So our panel today is going to touch on how that's playing out in the office sector, talk about emerging trends, and highlight what's working in office and where our challenges still are. So, Jim, I'm going to start with you.
Because of the age?
Of course not. At Cushman and Wakefield, we're forecasting that this is the turnaround year for office. What are your thoughts on the office market going from correction territory to expansion?
Well, I think some of it remains to be seen. I mean, most of our large employers have kind of given a mandate for March 1st to come back to the office, okay? So we'll see how that plays out. And if you think about it, you know, many of the office owners have put in amenities in their properties, but there's been nobody there to actually use them. I mean, even go to Midtown Manhattan, for example, all those buildings, 10, 20% occupancy. And so those restaurants and those amenities have suffered. So we're going to see how that goes, right? I mean, hopefully people will come back. One of the things, though, we have seen is that it's not been, those that are coming back, it's not like they need less. If they're office users, it's not like they need less space. They may be doing a hybrid work model, but they're not looking for less space, and we have seen expansions. But I would say the expansions are different for every city. So we've had a big sucking sound, which is to our benefit in the Sunbelt from the Northeast and Midwest. And in those markets, you go to Miami, for example, Blackstone's doubled their footprint in the last year. We just signed a lease for 12 years with Millennium Partners out of New York, with a 25,000 square foot expansion, and they're probably going to take the expansion before they occupy. So, the ones that are coming to the markets where they want to attract the talent, I think they are expanding, and they are signing leases, but people actually using the space, we're going to see how the year plays out.
Going to be critical. So occupiers, are you seeing them sign longer leases and new leases versus renewals?
For the right properties in the right submarkets in the right cities, right. Absolutely. What they're trying to do is lock in really, if you think about it, the rent component's pretty small. People cost are the most. And in today's environment, even more so, is getting people back to the office, getting in an environment where they want to come back to. They'll pay the rent for the relevant building and the relevant submarket. That's immaterial. It's more about getting the people back to the office. Right. So yes, We've seen long-term leases. Actually, we're kind of holding the line. We don't want to do anything less. 5 years is the least, and 7 and 10 is what we ask for.
Great. So we are seeing a significant flight to quality, where people want to be in, if they're going to have their employees come back and return to the office, they want to be in the best buildings. What's Parkway's experience with that?
Well, I mean, just the tangible example is our building in Miami at 1111 Brickell. I mean, we did a material repositioning before the pandemic, and the lease rates in that building have gone from the mid-40s to $70, okay? And the difference is there, while we have amenities in the building, in Brickell you got walkable amenities within blocks. Everything you want is right there. And in Houston, we've got a 5 million square foot campus, so all the amenities are contained. We tore down an old Club Corp facility that had 12 tennis courts, and it was just terrible. We tore it down and built a Lifetime Fitness that looks like a hotel, 60,000 square feet, 2 pools on the roof. So it's it's 50 acre, 5 million square foot contained. We had to provide those amenities on site.
Right. Okay, Peri, with Industrious having 150 or so locations around the country, you have a lot of visibility into real-time data as it relates to demand and how the office market's rebounding. What are you guys seeing?
Yeah, it's a similar sort of thing, right? We're in 1111. And the Millennium example is a great example of a landlord and co-working flex working together. Millennium's currently in our space because they need space now, and they're building out their space in the building today. So I think there's definitely an aspect of people who are looking for long-term tenancy also tend to need immediate space today. And so we see the same things in the same markets, but it's really interesting. You mentioned, 10% occupancy in buildings in Manhattan. We're sold out at a lot of Manhattan locations.
Right.
But we're off the rack. We're today. If you need an office, we're right now. Versus I think people are making decisions when they're signing 10-year leases. They're looking way into the future, and they're not going to be in that space for maybe almost a year. It's kind of a situation today. We use the analogy that it's like a train coming out of a tunnel. We have cars that are in direct sunlight right now, like Miami, Austin, Nashville, Manhattan. I live in Atlanta. Atlanta's kind of transitioning. Ponce City Market does fantastic for us, but that's a place where people really want to be. That's a place that people are coming every single day. North Buckhead around Lenox and Phipps is slower. And then we've got, cars that are completely still in the dark. We're struggling in Philadelphia. We're struggling in Pittsburgh. Those cities are struggling, period, right? I think the Sunbelt in general is on a very quick momentum upwards. So for my job, I'm in acquisitions, basically. And anything we do today, we're not going to open until this time next year. So we got to go because
Right.
we're running out of space today.
Right. So what are some of the indicators that you're following and paying attention to prioritize Industrious growth in which markets?
Yeah, we're really lucky that we have so many locations. One of the things that we look at is how are the locations doing today? I mean, I think that's a great example. We know we don't have a single office left in Brickell. We are completely sold out. And so, it's a market we would love to expand in, but so would everybody else. But that kind of demand, that we're seeing led us to West Palm Beach with Related, right? Where, that's another market that's on fire. No co-working product to speak of. We signed that deal in December. I'm getting phone calls today of who should we send, leads to? And it's like, guys, we're not going to be open for, 6 more months.
Right.
So no one quite yet. But, that kind of stuff, when you're seeing a market with that much office demand going on, I think that's a really great sign for us.
Right, great. Okay, so let's switch a little bit and talk about more of the return to office. Rae Ann, from a design standpoint, what are the areas where office space has changed the most through the pandemic?
I think that, everybody's been working from home. Obviously, it's been the great experiment, right?
I can.
And so with that, companies just need to think about how, they're treating their spaces. They need to come up with a model. It's not, it's not a hybrid office. It's not a one size fits all. You need to think about that. You need to provide a variety of spaces, and you got to create those amenities in the office to get people back in to collaborate and work together.
Would it be fair to say that, there was that trend pre-pandemic, let's pack them in as tight as we can?
Right.
Okay. We've seen it. How are you seeing it in terms of what people are designing now looking forward?
I mean, they are still packing them in. I mean, it's the smaller office. I think it's the actual workspace is getting a lot smaller, but then you have to create all the other type spaces.
All the open spaces.
Yeah, and that's where I think people get it wrong. I think they just do a big open, benching, and they just throw, collaboration in there. But it really is about creating a variety of workspaces for people, because people are coming into the office for different reasons. I mean, some people work really well at home, are able to focus. Some people aren't. They need to be able to focus in the office. So you got to be able to give them those spaces. And so I think the companies are getting it right, are the ones that are providing those options, and then allowing their staff to be more productive, right? Because they can work better.
And that's what we've seen, in that the total space amount hasn't been reduced. How it's been configured from what we've seen.
Exactly.
You know, they still have those open areas and conference areas that are a little bit more unique than they used to be.
Yes, yes. And
Still, but the box is the same.
That's really interesting, because we talk about like licensable square footage, meaning offices. People are paying to be in that office. And then we talk about amenity square footage, which is our conference rooms, our cafe, and all of that. We are increasing our ASF right now. Not drastically, but we're increasing it because we're seeing that our members want more meeting rooms, more phone booths, more places to kind of break away and have one-on-one or, you know, groups of 3, groups of 4 conversations. And so that is different than pre-COVID. Pre-COVID, we had a pretty solid ASF where we didn't feel like we were under or over. But in the usage now, we're like, we need to dial up that a little bit. Now, again, like, we're not drastically changing our floor plan. And it's kind of funny, because I remember, I mean, we had this conversation at the beginning of COVID, it was like, well, how are we going to keep people 6 feet apart? And like, how are you going to, you know, and we got to change everything. And it's like, okay, let's slow down, you know, let's, you know, and yeah, I think it's funny now to be where we are today and seeing there are slight changes, but we're not ripping up everything and starting over again.
Yeah, if you take away the me space, you need to build more we space in there. So, Rae Ann, you mentioned the hybrid office. What are owners, occupiers, brokers? What do we not understand when we talk about the hybrid office?
I think it's just what we're talking about now. It's just not, you can't just, it's not cramming people in. It's not doing any of that. I mean, companies like PwC and you know, KPMG, they've been working on their model for years, right? And how they work and their kind of more free addressing and all of that, and what people come to the office for. And so I think companies now across the board need to start thinking about it. I mean, they're obviously behind, and it's going to evolve and change, and that's what you need to know. So it's as much built-in flexibility as you can put into the plan and into the space for future, because I think it's going to be a learning experience for everybody, and you got to understand as a company what works best and make sure people, you know, the most effective.
But I've got an opinion on that,
Okay.
on the people working from home and the hybrid, you know. And this wasn't my idea. I heard somebody else say this, and I really think it's true, in that the people who do come to the office, you know, if you have an option, when they start making more money and get promoted more, the rest of them are going to get their ass to the
back
office.
up, yeah.
Yeah.
I tend to agree with that.
I mean, our investments team did not leave the whole 2 years.
Mm-hmm.
They were there working, and, you know, that's been recognized.
I mean, virtual does not replace in person, I mean, by any means.
I think it's a tool, and it's helpful. You know, I think none of this is new. People have been working from home for a while, you know. It's the same thing with, you know, flex. People talk about it like it's some sort of massive game change. It's like, this has been happening for a while.
Right.
You know, so what we're seeing with the large occupiers that we talk to is, you know, okay, I need to have sort of the flexibility and the ability to use these tools, but my base is an office that people come to the majority of the time. Like that, we're hearing that from everybody. And you're seeing even like the Googles of the world, when they're saying our expectation is people come in 3 days a week, that's a really big sign right there. Like, and most people are following suit. Google's buying as much office as they can in Manhattan. They're buying things left and right. And these are decision makers within not just office, but, you know, employment in general. And we see that, and we work with, you know, a ton of massive occupiers like that, and all of them are saying, you know, we need our folks in the office. We'll use work from home, and we'll allow that from time to time. We're going to use flex and, you know, use a hub and spoke model from here and there, but the majority of it is people come to the office.
I think the one thing that I would worry about if I own call centers, I think that's a little bit different. What I've heard
That's an outlier.
is the people who, you know, they can, because technology, they can measure their productivity from home, and they don't really need to collaborate on what they're doing. I mean, there's a very large timeshare group here in Orlando, 1,800 employees on the call center. They're selling off 2 of their building, and 2/3 of them will just stay remote, period. okay? Because technology can allow them to measure that. I think that's a little bit of an outlier.
Yeah.
So, I think from an office perspective, those things will have challenges later on.
It is interesting that you bring up the call center because we have clients like Verizon, right? And Verizon has all sorts of employees, including call center. And they said one of the problems that they're hearing from people within the call center is, I used to get a question, and if I didn't know the answer, I would stop and find my manager or find the person I knew who'd been here for 2 years longer than me and go ask them the question. And when I work from home, I'm on Slack or I'm trying to find somebody and I'm freaking out and I'm waiting with the customer on the phone, and I used to just be able to get up and ask the question. Now, I agree with you. I think that,
I don't know how it's going to change, but
Totally.
I think it's probably, that would change more than anything else.
100%, but I think what most of the employers, that we work with and you work with, and, in buildings like 1111 are, they need to be in person the majority of the time to do their job.
Right, okay. So Peri, talking about co-working and flex, with the pandemic, have you seen more people turn to flex as a solution, short-term versus long-term, or do you think it will be a longer-term solution?
Yeah, yes, we have. Am I going to sit here and say that it's going, this is it, we're gonna, I really don't believe that. We are a beneficiary of the pandemic in a very weird way. It definitely has increased business and increased attention, which is great. We also thought we were going this way anyway. We often talk about the fact that the pandemic sort of accelerated trends that we were already seeing. So a great example of that is what we're calling, fixed flex, where we're seeing tenants come in and say, okay, I still want my 60,000 square feet, but I also want to know there's co-working or flex in the building as an amenity to flex in, flex out, because I'm not really sure how much space I need long-term, and I would just prefer to know I have this outlet that I can use. And some of the things that we're doing today that are really exciting are going in hand, and they're starting from day one using flex next to their 10-year lease on 60,000 square feet at a great rental rate in the Sunbelt, but knowing, okay, we're gonna have this flex component because we're not really sure how long we need, that component. We thought that would happen 2-3 years from now. It's happening now, which is, that's really exciting.
It's the third workplace, right? You have the office, you have the at home, and you have the flex option.
Yeah, I think the flex option is hand in hand with the office though too.
Right.
I think that people are using it the same way, and the thing that excites me the most is when I talk to the landlords I work with and they say, we view this as an amenity. That's what we want to be. We want landlords to view us as something they need in their building as an amenity and not just like a tenancy. And we want to be that incubator. We want to grow people into, long-term leases. We're seeing a lot of spec suites right now. We want to be a feeder to those spec suites because those spec suites can become long-term tenants.
Right.
And so we want to help landlords kind of capture the life cycle of a company. What we don't want to do is go into the mid-term and long-term range. That's not what we do. And, some of our competitors play in that space. That's never something that we're interested in doing.
So I read a stat this week that currently flex compromises 2% of the overall office inventory, and that by 2030, that should make up 6%. That's a lot of product.
Yeah.
What do you think about that? That feel about right?
Yeah, I think it does, and it's dependent on the market. Some markets are already a little bit higher than that, and a little bit more saturated, but on a nationwide basis, you see 2 to 3% in Class A office. You read some reports, that it's going to be 10 or 15%. I don't know about that, but I know that, we need to grow pretty significantly. All the trend lines, every graph you see from our locations, everything's trending upwards pretty fast. And that tells us that we're going to run out of supply. So, we need to move. And especially for us, we use the term, we're at the third seat at the table, kind of, the smaller dog in the fight, which I like being, but it also means that we have way more growth to do.
And Jim, in your portfolio, how much flex do you have?
Well, we have it. I'd say as an overall percentage, I can't imagine it's more than that 2 or 3%.
Right.
The case here in Industrious and 1111 Brickell's been a great partner. They've done a great job. Their space looks spectacular, so it's been extremely additive as an amenity to the property. I would probably be careful to not have too large of a percentage in any one building, because on your residual, I think that could be adversely affected. I mean, before, everybody was WeWork, and then if you had WeWork, your pricing went down. So I think the right operators, and Industrious is one of them, is additive. I just wouldn't want to have too big of a percentage. Now we've had to take over some spaces in Texas that it was an operator that wasn't national, that we built it out, spent a lot of money, they went under. Okay, so we've had to operate it ourselves. That's not our business, and you don't get credit for that on a sale. So even if we were generating the same money from rent that if we had an operator there, there's not a lease in place on that, so we don't get the credit on the sale. Even if you had a history of that, it's hard to get valuation going forward. So having the right co-working at the right percentage is a big amenity, and will continue to be so.
That's the perfect way of thinking about it in my mind. I think, your operator is so important, and the way that these agreements work now today, and we pioneered this 3 years ago, but you're not going to see flex operators signing fixed rent leases day in, day out. It's not happening. What's happening instead is, management contract is a term that gets used and abused, but the point is they're variable agreements. And without that operational history of revenue coming in for years at a certain level, it is going to impact your valuation. And I think that on top of that, a good threshold of you don't want your whole building being flex and being variable. You want Millennium, and you want big tenants signing 10-year deals, and you want it as an amenity and a piece. And I think most of what I'm doing in the Sunbelt, we're looking at 30, 40,000 square foot spaces. Anything above that is honestly for us is not something that we're overly, looking into. Ponce is our biggest in the Sunbelt. We've expanded it twice. It's 70,000 square feet. It's our flagship. And we won't do many locations that size.
Okay, so let's talk about amenities. We've touched on it a couple times. Jim, from a leasing perspective, what common area amenities are attracting tenants to Parkway's buildings, and where are you getting the most bang for the cost?
Well, again, you have to have the amenities today, and they have to look different than what they did 10 years ago. But it's also a function of the market you're in, right? So on Brickell, we've got walkable amenities, right there.
Right.
So we don't have to have as many food service operations, et cetera, in there. But we did put an amenity deck on the 10th floor. It's an outside. We've landscaped it. We have structured, workout classes, a lot of kind of healthy food options that are more just kind of grab and go options, not sit down restaurants, because there's amenities there. But you have to have it. I mean, again, it's all back to, is this an environment that will attract the younger workforce that the corporations that are leasing there want? Okay, so you either have to provide it on site, or you have to be in the submarket that provides it within walkable amenities, and it's critical. Those are the first things they check out on the property tour. You have to have it, and it's different than today. The old, 2,000 square foot gym with antiquated equipment doesn't cut it anymore.
Doesn't cut it, right. Okay, Rae Ann, many changes that tenants and owners are doing to improve their physical space are expensive and time-consuming. Before they embark on those capital investments, what should they consider so they know it will be a good investment?
I mean, for the landlords and the property owner perspective, I think it's about, making sense of the space that you have right in the building, lobby spaces, activating spaces like that. I think outdoor space is huge. I don't think you can go wrong with that. It's not leasable. Neither is the lobby space.
Yes, but you have to incorporate that even in the southern areas where it's a little warmer. You've got to be able to put some fans, some air conditioning, something to incorporate that.
I know people do say that, but I mean, gosh, it's beautiful here half the year. I mean, every city has issues with that, but I think people love that and need the outdoor space. But, and it's also about like an aggregate design, so it's putting these functions together. It's not just checking a box, I don't think. It's not like, okay, we have a space opening up, let's put a conference center in it. And then let's put our fitness center over on the opposite side of the building or on another floor. It's just making sure that you put them together. So as people, come, it's more of creating that variety, and then flexibility in those spaces. So if you have a cafe, in the building, creating, adding the conference center nearby, the flexible, just so again, it's getting the maximum use out of all of those spaces.
I think the outdoor space is such a key point.
People love it.
When we're looking in the Sunbelt, we're opening the Dorsey and Wynwood It has an incredible patio. We've got multiple locations coming now that have patios within our location. That's not something that I can license out to someone and make money on, but I guarantee you when people walk through it, they're gonna pay more money for their office because they have that space. And I think that's one of the things that we saw working from home and a lot of us in the Sunbelt. So, I'm on an internal, it's now, beautiful in Atlanta. I don't know how many internal calls I'm on and people are on their patio during the call, and it's like, they get to sit outside and that's nice instead of sitting, in an office like they were used to. So I think smart, property owners and some tenants can provide that and have that ability, like take the call outside, there's nothing wrong with that.
It goes back to the flexibility, variety, people value that.
And I think you have to think about like who your target, people you're leasing to, the companies, because it may not make sense to have these amenities, but it just depends on who you're competing against, I guess, and who you're trying to get in the.
I think the point about amenities nearby to buildings is so key too. We get asked all the time, is it demand suburban or is it CBD or is it, what is it? Where are people going? And it's like they're going to places they want to go to.
Right.
And so, I used, Charlotte as a great example right now. People are kind of fleeing uptown Charlotte and going to South End, which is, a mile or two away. Why? Because South End has, all the retail, all the restaurants. There's apartments. There's people walking up and down the street. There's, they have a light rail and a walking path. It just feels good. And right now, the CBD of Charlotte is mostly banks and larger tenants who have not come back to the office yet. And it's dead, and it doesn't feel good there. And we see it, we have a NODA location that is 92% occupied, and our uptown location, 10 minutes away, is 60, and it's like, why? Well, because people want to be in an area where they can walk to great restaurants. They have all of that amenity stuff around, and it just feels better to be there. And it's not a question of suburban or urban or any of that, it's the environment.
But what's funny is uptown Charlotte, you go to Buckhead, there are walkable amenities, but they've just created a kind of a cooler amenity base, West Midtown.
Yep.
Okay. Or in Charlotte, and so it's funny. It's
What's hot?
You've really have to cater to that younger workforce. I mean, you got to just think about it completely differently. We've got to entice people to come to work. I mean, in the past, people didn't mind sitting in a cubicle working 12 hours a day. That's what they did. They had to do it. Now to get people to come work, you better create some kind of really fun place to be, or they won't come.
And I think it has to be authentic. Like, we got a lot of younger folks in the room, and like, they don't like being pandered to. They really do not like the feel. Like, there's a lot of part of that Buckhead stuff is like, it feels inauthentic. A lot of it does. Versus Pond City Market, West Midtown have these authentic feelings. That's a really hard thing to like, none of us can sit here and write a paper and give you guys instructions on how to do that. And that's where you see the really good landlords of the world kind of have that feeling. I was in Lake Nona, we were just talking about it, earlier today. They've done a great job making that feel authentic for a city that literally just grew up out of the ground overnight and has cows grazing next door, like in an open field. It feels authentic, and that takes time and money and patience.
Is that all Jim Gray? Lake Nona?
So Peri, what are some of the unique amenities that you put within your space?
Yeah. I work out of the Ponds location, but we kind of go everywhere, and we have the luxury of that. I can work from any location, both in Atlanta when I'm on the road. The phone booths are full, and so I love seeing that. That's a great sign for me, but also like, damn, I wanted to have a phone booth for my call. Like, we need more phone booths. So I think that's number one on the list for us right now, and. Outside of physical stuff, the only thing that really separates Industrious from, a crowded field is we are the only hospitality-based flex company. From everything within the company is based around a hospitality standard, from the way the community managers are really like bonused and the way that their performance reviewed is not how many people are in your location, but it's all around what's your net promoter score of your location. And I worked at Jamestown for 7 years on the landlord side. I had no idea what NPS was, never heard of the term. But if you fly Delta and they harass you, rank us 0 through 10 of how the flight was, they're trying to push their net promoter score of how likely any of you are to go out and recommend Delta to someone or not. And we run the highest NPS in the business by far. A great example is like Merrill Lynch as a company is a 55. That's fantastic. We just redid ours for the first time since COVID. We're a 74. And so when you talk about amenities, we talk about hospitality. We talk about the fact that, our community managers know, everybody within their space. They know, things that you've told them in the past. They have conversations with you. They do all the surprise and delight things to try to make your day better. And then it's, the happy hours and all that
Right.
stuff on top of it. And, we see that from people within our space. That's why we have the lowest churn. That's why we keep our members, is because they like being there. And that's
The experience you're
right.
creating for them.
Exactly.
And I think, for getting, like we were talking about earlier, getting workers, employees back to the office, you've got to have something to offer them of value there. So Peri, how does having a flex operator in a building add value to the owner?
I think the Millennium example is a great example of, right now tenants are out looking for long-term leases, but also looking for immediate space. If they can come into a flex operator within a building that's been renovated and feels fantastic, it has amenities, they're going to lease in that building. And that's what we want. Like that to me is the best value we can add to landlords. That's an example of kind of accelerated, but we also, at Ponce, we had Airbus. Was a member of ours. They had 6 people. And then if you fly Delta recently, they have way more Airbus jets. And that's happened over the last 5-6 years. Now all of a sudden they had 20 people. Good, we can accommodate you. Then they decided to move their entire drone business to Atlanta, and they were going to have 60 people. We couldn't accommodate that. There was no more space in Ponce City Market. We called Jamestown. Jamestown gave up some of their own headquarters space and leased it to Airbus. You don't get higher credit tenancy and a better tenant. And they grew within our flex office. Like that to me is what we can do best for landlords.
You're feeding the tenants.
That's what we want to do.
Yeah, I think when when they were considering the building, because there was other options, having them, their space was built out, it was finished, turned out spectacular. They did a great job reputationally, and so that was very additive for them because they did need to get in sooner. They wanted to move people down here sooner. But it's it's the right operator is a huge amenity to the building.
Right, great. Jim, what office markets in the Sunbelt interest you the most? Where are you going to invest?
Well, our markets are Charlotte, Nashville, Raleigh, Atlanta, Florida, Texas, Phoenix, and Denver. So that's our footprint. And those have generally been the beneficiaries. And the thing is, that was happening before COVID. I mean, that was happening before COVID. And what was really interesting is, we deal with a lot of institutional partners. And I'd say before 5 years ago, generally some of these larger ones would only invest in the gateway markets, New York City, DC, Boston, San Francisco, Seattle, et cetera. All of those big guys are now wanting to invest in all of those Sunbelt markets, just because of the demographic trends, et cetera, which has been accelerated during COVID. So you get calls. I had a call from Blackstone yesterday. They're not big on office, but they'll do it in San Francisco, they'll do it in Austin, they'll do it in Miami. And the problem is, if these large institutions with a lot of cash to invest want to invest in our markets, the general size of our properties are not that large compared to the gateway markets.
Right.
So, finding a large asset in the right city, the prices for those have gone up because there's so much demand for it. I mean, obviously, industrial and multifamily in those markets as well, too.
We were talking about that yesterday, right? I mean, and I think part of what's happening in the Sun Belt right now is we're building it. It doesn't exist. And so I faced that market that you described as my exact market, what I cover with my team, except up to DC as well. And, we're a New York-based company, and I constantly remind them, you can walk around Manhattan and there's all these massive skyscrapers everywhere. That's not my market. We're building them right now. So we've got to be flexible and work with developers. And right now we're working on some deals that may not open for 2 or 3 years. But that was the Dorsey 2 years ago in Wynwood. We convinced them to do it, and we're going to open that into the best possible market because we were there as one of the first tenants.
Peri, any markets in the Sunbelt that particularly you're bullish on?
Miami, definitely, absolutely. Austin, absolutely. Nashville is white hot right now, another market where we're running out of space, another market where our downtown office is doing better than it was pre-COVID. I think Atlanta's transitioning, Charlotte's great. Raleigh is super slow right now. It's really interesting, Raleigh, but that's a great example of, again, dynamics and where people want to be. The CBD of Raleigh was hit hard, and it's just kind of dead. And it's a lot of banks and a lot of insurance companies that haven't decided to come back yet. I have no preconceived notions it won't come back, but it's taking a little bit longer. But all the markets that Jim mentioned are the same markets that I'm working in, and all of them have been the beneficiary of COVID.
You're even seeing Tampa getting California migration
Right.
in office. Kyle Bird, who used to work with us now with Cousins over there, I mean, he tells me a big chunk of what they're doing is new demand from California. And generally they left California, they went to Denver or Phoenix or Dallas or Austin, but they're going as far east as here now.
Yeah, those markets now have not become, the kind of price break that they were looking for anymore, especially Austin. And Tampa's a fantastic city.
Tampa sold that new development to Cousins for $550 a foot.
Yep.
Okay, it was record pricing for there.
Yep.
Peri, any headwinds for the flex product and environment?
Yeah, I mean, I think some of those same cities we mentioned to us are the cities that I think are going to continue to struggle, but I don't think that's a flex thing.
Right.
That's a much bigger problem
Right.
that we're just experiencing as well. I think one of the things that Jim mentioned was such a fantastic point, and one of the things that I'm working really hard on is valuation and helping landlords. And what I never want to be in the situation of is, you go to sell your building and you're negatively impacted by us. And so we're working really hard on trying to, right now I don't even know who did it, but someone made a standard of don't put flex as more than 15% of your building. And now everybody repeats it like it's gospel, which is great. And I think that the CapEx markets also follow that and say, okay, if it's not more than 15%, we're not going to negatively impact your building. But no one has stepped up yet and said, this is how you truly value a revenue share or a profit share. And this is what you need. This is how many operational years of history you need. And this is how much we're going to discount it. We need that so badly because it's the only way this market is going to work, and it's also not rocket science, it's not new. Hotels trade, multifamily trade, all on variable, and they're able to underwrite, they're able to debt finance, all of that. So that's the one thing that I think we are pushing to try to get understanding of, and I think we'll get there. I really do.
I think we're going to take some questions from the audience if there are any. Early Friday morning, huh? Quiet group in the back.
Yeah, that's a great question. So we call them suites, and what we've never done at Industrious is you don't walk into an Industrious and one floor is co-working and 2 floors are Johnson & Johnson, and you have no idea if you're visiting Johnson & Johnson, they're within co-working space. We've never done that. We don't do that. Our biggest offices within the co-working space have generally capped out around 20, 25, and we feel comfortable that that's as big as you want to get within co-working in one office, but we are ratcheting up the suites that we're building, and suites start around 12 people. There is a bigger demand for that because there's more enterprise companies, and again, enterprise is also a word that gets used and abused. We think of the type of member, not just necessarily the type of space, but they generally fluctuate to higher, bigger spaces. So our new build outs definitely have more suites within them, but a ton of 1-person and 2-person offices. That's what we're selling out of the most right now, is the small 1-person, 2-person offices.
Anybody else?
Here, Julia.
Okay, in the back.
This question is for Rae Ann. So every asset class panicked after COVID, industrial, office, retail, hospitality. What was your group thinking? What was going through your head? How did you pivot, and how much of it actually came true?
As far as, we've always been touting flexible design, right? So in modularity in our design and thinking smart about how we design spaces, and creating a design that you're not building stuff that you can't change. You got to be able to like build with modules and design with modules that you can easily take away and add to create change. I mean, nobody has a crystal ball, right? Nobody had it before when we talked about, growth. So it's no different there. I mean, I know us in our industry, the design industry, it's all about collaboration. And we realize that we all have to be in the office, together, obviously, as much as possible. But it has opened up, I think, all employers and companies' eyes to the fact that, people need variety and change and options. And I think that's a big positive. So it's still evolving. I don't know if I answered your question, but it's still evolving. Anyway.
Okay. Yes?
that throughout the country that occupancy in office space was in the 30 to 40% range nationally, which I work with Wanda at Cushman Wakefield, and I can tell you that's not true. It's not true at all. And I don't know where they got their stats. So number one, kind of disinformation in the real estate world about what's really happening in the office market, I think is an issue. What do you think about that? Number two, the leverage or the challenge between employers and employees to returning to work. I agree with virtually everything you guys said, but I think it's only now, since the CDC has really changed a lot of their guidance, it's really only now that a lot of big companies have said, we are coming back to work. A lot of our firm did it this week. February 28th was the day for everybody to be back across the country. In the South, we've been back, for a year and a half almost already. So thoughts on the leverage between and the challenge between employees and employers in terms of when they come back and who has really the upper hand to make that happen, given the change in what's going on with the pandemic and disinformation in the office world. Thoughts?
Well, I'll take a little bit of it. You're right. I mean, it was for the majority of the larger corporate users, March 1st was the date. They had to be back. So that's what excuse me. That's what we want to see is how many of those actually come back and how soon. Because the question is, if people still say I'm afraid or I'm concerned and they don't come back, how much latitude do you have there? How long do you wait? And do you get rid of them if they don't come back? I think some of that's going to have to fall out, and we're going to see. We don't know yet. But I do agree that, I don't know what the occupancy are. It's clearly trended up, but until the smaller users have come back more en masse because they weren't worried about some of the big corporate mandates or the CDC, but the big corporations who are very visible, they have kind of adhered to that, and now they've all kind of opened up the doors. So we got to see how that plays out. From our space and we've been back, just as you said, we've been back. And of course, if somebody says, well, I don't feel comfortable, or I've got somebody who lives with me that, could get sick. And so there's going to be some of that you're going to have to get through at some point in time. I don't know when that wanes.
Yeah, I think the SMB point was such a good point. That's our bread and butter. We deal with 6-person, 8-person, 10-person offices. This is their headquarters, right? Like this is their company. This is where they go. Enterprise is a big part of what we do as well. But those people have been back for a while, right? I think, and I can say this as a recovering attorney, the part of the problem is the legal departments, the HR departments, the CDC. And the guidance is all over the place, and no one wants to be stuck in that position of saying everyone's going to come back and being liable. I think that's kind of the thing that we don't really want to talk about, but it's the truth. And I think a lot of these bigger companies now are just getting comfortable making those decisions. I think the next 6 months are going to be really kind of game changing. And the other thing too that I look at is like living in Atlanta, I can't get a reservation at a restaurant anywhere. Restaurants are packed. You go to Braves games, they were packed. The stadium is packed. People are getting comfortable going out again. That's not really a problem, right? So I think that's fair. There are people who have different health situations, and we've got to be cautious of that and listen to that. But I think the general sentiment is way different than it was, 18 months ago.
And I think that as an employer, they talked about it yesterday at one of the panels, is the great resignation going on right now. But someone said, no, it's actually more the great rotation, because I think you have to retain talent and attract talent, you have to provide flexibility in how people work. And you have to, again, make that office space enticing and make people want to come in. It can't just be like the old standard of you're coming back, you know,
Right.
and that's it. You really need to start thinking about, you know, what people want, what the younger people want. We know they want to come back. It's just to what degree, and then what's offered for them there, because obviously they need to learn and grow, and we need to learn from them. So
I think your question about employer and employee is actually really about culture. Like, if you have a culture where people want to come into the office and want to be with their coworkers and get a benefit from that and learn and have a good experience, then they're going to come back. If you don't have that culture and you want to mandate that everyone comes back, yeah, you may have a problem. That, you know, I can see that.
Great. Another question in the back?
Thank you all for your comments today. A question for Peri. Clearly, you know, the level of improvements that you put into your space, the quality of the space, the amenities, clearly that's a substantial investment for you all. Can you give us an indication of, you know, approximate cost per square foot that you put into that, and your expectation for how long that will last, how long it'll be before you look at a recapitalization or additional investment in that space?
Yeah, that's like one of the top things that I'm working on right now. So it's a very pertinent question. I think one of the things that I would correct you on is it's not just a sizable investment by us, it's a sizable investment by our landlord partners. And I think that to your point earlier, you know, even in a lease, these were high TI leases. You know, landlords are actually spending way more money on our space. We like to invest side by side because selfishly we get a great IRR on our capital when we perform. And that's one of the things that our investors look at. Right now, costs, and everybody in this room knows this, costs are skyrocketing. And, you know, and my job and my team's job, you know, trying to sign these deals and do locations, seeing 20% increase on due diligence is really tough when we were already a really expensive product. To your question about how much it differentiates in market, you know, the New York builds are way more expensive than, you know, if I build something, you know, in Atlanta, but Miami's getting there, I'll tell you that. But, you know, I think we are working really hard with our fantastic design team, and I know this is a question you probably get a lot as well, is like, how do we value engineer the space? How do we figure out how to do things differently? You know, our product can't be the same product it's been for the last 10 years, and we've been around almost 10 years. But at the same time, we can't lose that look, touch, and feel of a premium product. You can't do that. The second you do that, you're going to destroy your pricing, you're going to destroy the experience. So it's a really fine balance. Like, if it was up to me, you know, I'd just be like, let's cut costs, you know, let's use more drywall. We have fantastic design people that keep us from doing that then on the deal side, which is good. But it's a balance. It's tough. And, you know, it's something we're fighting with every day now.
But to quantify it, I mean, you know, for that kind of space, it's well over $100 a square foot before, and prices have gone up since.
Yeah, you said that, I didn't.
Rae Ann, what are some of the re-engineering type of things that you're suggesting and putting into design?
well, it's, again, like kind of coming up with building blocks as much as you can, not putting things on the glass, you know, pulling in the enclosed. I mean, it's stuff we've been talking about. I think just companies need to think about that, building the built environment internally. And then, again, like creating spaces where two phone rooms equal a huddle room, 2 huddle rooms equal a conference, you know, so it's just kind of thinking smart like that to where you can take down a wall and make changes over time with drywall. I mean, because what's not cost, well, it's hard. It might be different. I'm curious about like demountable furniture and all that, how much Industrious, you know, uses that, because clients ask the question, because there's a huge cost in that. But then in the history tells us that, I mean, no one ever reconfigures it, so it's not worth it. So, you know, again, like with like hard construction, it's just trying to plan smartly, plan spaces, like, again, flexibility, like conference rooms that open up can be changed. It's all about flexibility. It really is.
The mountable walls is like one of those things that sounds so good in concept.
Yeah.
But it's really not. And so we've never built out with it. We have our first location with it because it was a previous operator that we've now taken over. We're really excited to see how it works. We're also really excited that we didn't pay for the demountable walls.
Exactly.
And there's sound attenuation problems, and also like I finally got to see how you take them down. It is a process. They've got to come in over a weekend, take all the walls down. You got to find a place to store them. It's really difficult, and we're not in the Jetsons age of the walls just disappear. It's not that easy.
Right.
And there's quality impacts as well.
Okay.
Hi, I have a question about the amenities. Pre-COVID, several conventions that I attended, we did tours of high-end spaces and buildings with unbelievable amenities. But what I noticed at every single building we toured, the amenities weren't being used. They were empty. And so my question is, do you need to build it so they will rent, but do they use it? And is it going to be just an empty space in a building that looks nice that doesn't get a lot of traffic?
Well, if your building is occupied and you've done the right amenities, they absolutely are being used. I mean, clearly, one of the problems during the pandemic was we spent money on amenities, and the people, the proprietors who ran these facilities, there was nobody there to use them. So we've had to be, very accommodating. We've kind of abated their rent during that whole period. We've done whatever we could to keep them in the space until the people came back to work. But if you've done it right, it is something that people absolutely do use, and if you didn't have it, you wouldn't get tenants into the building.
I think, Parkway does a really good job of building the right amenities, though. I walk a ton of buildings in my job, and I see what you just said, and I see golf simulators, 5 of them that aren't being used, and I'm like, oh my God, why did you guys spend so much money on golf simulators? People want to go golf, they'll leave the office and go golf. But 1111 has fantastic amenities. I was just there in December. The deck that Jim's mentioning was full. People were out, having lunch and having events. Somebody was having their birthday out there. Those are the kind of amenities that people really want. And I think too often landlords are just throwing money at a problem and hoping that
Right.
these amenities will be great. And I think part of it is that shock and awe and a tour of like, wow, this is great. And maybe that does get the lease, but it doesn't get used.
And location is key. I mean, they have to be along a path where people will, if they have to work, and it's out of sight, out of mind, right? It's
Yeah.
got to be somewhere that is visible and.
We have a big campus in Houston, the 50 acres that I mentioned earlier. We've got a bocce ball court. I've not seen anybody playing bocce ball on it, but I don't go there that often. But it sounds nice to put that on the tour, but we have the land for it, so it's not like it's costing us that much to do it.
And I think bocce ball courts are cheaper than the golf simulators I saw too. So.
That's great. Okay. I think that was our last question. All right. Thank you, everybody. Enjoyed it.
Thank you.
Thank you.